Hey everybody, this is Jim at SP500chart.com using time-honored techniques to understand modern markets. It is November 10th, 2011, a few minutes after the close, and we're going to take a look at the S&P chart in just a second. But first I want to remind you this is brought to you by SP500chart.com, and if you're looking at this on the 10th, thanks for being a subscriber. And I want to remind you that the website and this video are for educational purposes only. Nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm still not a licensed financial professional. I'm just a guy who draws lines on charts. Okay, today is one of those days where I almost feel like saying, hey, I got nothing for you. Your guess is as good as mine. And the reason I say that is because the S&P is kind of in limbo right now. I think we may, well, what am I trying to say here? It looks like this move down really wants to come test this low 1200s level. And we had started to form what looked like a descending wedge yesterday. You see it right here. But for the second day in a row, the overnight futures traders gapped the open for us, which kind of screwed up my plans 2 days in a row. And you might say, well, what were your plans? Well, my plans were to short at 1280 up here. That would have worked out beautifully. And my plan this morning was to go long on the next touch of this bottom line in this descending wedge, which, thank you futures traders, didn't happen. So we're just kind of in this little middle range. You look at it, you look at this move from 1280 down to 12 to 1220s, that would have been sweet. And then had we gotten down to 1220 or 1218 or something, and then up to 1245, that would have been great. But instead, we gapped down, and essentially, with a good bit of volatility, but we gapped down, and then we essentially go sideways. And again, there's a good bit of spread in here. Don't get me wrong. So this is kind of what I see that happened today that I can point out that I think makes some sense. And that is we had this area, this line right here that was support back on the 4th and the 7th. And then it was resistance twice today. So I think that this little pattern right here is defined by this top line and this bottom line still comes into play. And you can see how clearly the S&P was turned back on both approaches to this line right here. So what am I looking at right now? Well, I'm looking at a possible setup to come up and retest the 1260s. And what I'm seeing here, it is going to be contingent upon something. I'm not saying this is going to happen. What I'm going to say is if something else happens, then that will likely happen. So there's a condition here. And that condition is that this line and those two orange lines get broken. In other words, if the S&P can trade up to, let's say, 1249, call it 1250, then it should tack on enough points to come up and retest this blue line right here. Now, if we measure this pattern, what we'd be looking at would be an inverse head and shoulders, and the height of the head would put us up to about 1265, again, assuming that these lines can get taken out, okay? Because there's another picture, and that's why you have to say this is contingent. If this line of resistance can go along with this one, then this depth of this pattern right here should be tacked on to that move, and we should see the mid 1260s. And I think if we're going to go 1260s, might as well go ahead and test this line. However, there is another possibility, and I've got to make it known that this whole thing right here between this gray line and this line right here could be a bear flag. And that would be setting up a move to test the low 1200s. So we got two things that I'm looking at right here. And unfortunately, this bottom line is not extremely well defined. Okay? So it's not like it fits as nicely as this one right here. But that's why I say the market it's almost exactly in the middle of no man's land right now. We're stuck here at 1240 with a potential target to the upside if a breakout is made into the mid 1260s, or if the breakout comes the other way down here as low as 12, even lower than 1210 in the low 1200s. And I don't know which way it's going to go. And I don't think anybody knows which way it's going to go. Somebody will get it right, and then they will claim that they knew. And I could flip a coin and say that's my story and I'm sticking to it. And if I get lucky, you would feel, gee, I'm sure I'm glad I subscribed to this site because that guy's a genius. But I have to let you know that sometimes, and I'm not saying I'm a genius, but I have to let you know sometimes genius also includes knowing when to say you don't know. And right now I don't know. So, there you have it. Kind of a strange day today in the way it played out. I want to show you one more quick thing here, just so we put all of this in context. I remind you again, we have this large head and shoulders pattern with its neckline that is this purple line right here. We twice got over that. We got over it very briefly. When was that? A couple days ago. And then we got over it with a little bit more gusto back at the end of October. But you need to keep that in mind too, that this line should be a strong resistance. And if this market does turn down, then we may have to kind of well, what's a good way to put it? It could get serious. The last two times the market made a head and shoulders top, there was a very, very serious sell-off. Let me scoot all this over so my lines kind of halfway line up again. And again, if we look at a 30-minute chart, you can see that there have been some fairly decently defined areas of support and resistance in channel action that have been broken lately too. So all of this leads to, do we get a back test to 1265, or do we come back down and check out these low 1200s? And just to recap, what I plan on doing is watching this line. If it breaks, and let's say we set a low less than 1234. Yeah, I think that's safe. 1233, low 1230s, then I think this market may head back down, give up another 25 or 30 points. But if we break out up over these lines right here, these three lines, and that would mean we would need to get up to about 1249, 1250 to say that has happened. Then that may be that should signal a move to back test some of these broken support lines. So look, those are my stories, and I'm sticking to them. Wish I could tell you something a little bit more definite today, but clearly if I did, I would feel like I would not be doing anybody any favors. So with that in mind, I encourage you to do your own research and due diligence, and be careful. This is unprecedented volatility. We got somebody over in our forum who put together a chart, not a chart like I do, but basically saying how many days has the S&P moved in a plus or minus 2% range, and it is staggering over the past 60 days. How many days from the day low to the day high, or from the high to the low, in other words, the daily candle, how many days have we seen at least a 2% move in the daily candle? And well, I think it's like over 90%, I believe is what he said. It is just crazy. So look, be careful. Thanks for watching the video. Take care.